we're talking about October 2020 versus 2019. And seriously, the market is unbelievable. I don't think I've seen a market this hot ever. I've been investing for 22 years. I've been selling for 13 years. This is as hot as I've ever seen it, and other people have said the same thing. My colleagues who've been selling for longer than me have said the same thing. And investors I've spoken to who have been investing for longer than me have said the same thing also. The market remains absolutely red hot, and I said last month that the market was red hot, so that's why it's remaining red hot. And in fact, what you'll see soon is that price growth seems to be accelerating, and that's certainly what we're seeing on the ground. It's absolutely moving at light speed. And the data is now starting to show, yes, that price growth is indeed accelerating, and it really is kind of eye-watering out there. Every week, my head is spinning and my eyes are watering with the results that are being achieved out there. So it's very, very difficult to predict how much properties are selling for at the moment. Things are just moving so very, very quickly. So let's look at the numbers. So here we have median sale price. Again, the Wellington region here. So October 2020, just gone, median sale price 785,000, and that compares to 650,000 in October 2019. So that is up a monstrous 21%. That doesn't necessarily mean underlying values have gone up 21%, of course, because this is the median, the absolute middle sale of all sales in the Wellington region. So if you happen to have sold a bunch of valuable houses, that will tend to be inflate the number, but it is on a pretty large number here. So it doesn't fluctuate as much as it might do in a small territorial authority or a small data set. So if you haven't seen these graphs before, the blue data is the monthly results. So that's the median month by month. And I apologize that my Excel skills are not so good that I've got the actual years and the months along here, but we're talking 68 months worth of data. So that is 5 years and 8 months. So this goes back about to the start of 2015. So that's the blue line and the blue data set rather, and the red line is just the 6-month moving average. So that shows you the trend over time of the last 6 months medians averaged out. So as the market is, as the prices are growing, the red line will tend to lag behind the blue one. So this is pretty interesting. The last 6 months median prices in Wellington, if you look at the blue data, you can see there we had a couple of, or 2 or 3 sort of months that were lower than the previous 3, and this was just when COVID, we were coming out of COVID, and we were wondering, okay, has COVID impacted prices? It went down for a bit, and then you can see here that it's literally like a hockey stick. So 6 months ago, 5 months ago, pretty similar, but still growing, and then growing again, and then growing again, growing again, growing again. So this is definitely a bit of a trend here. I mean, it doesn't necessarily mean that next month the numbers will be higher again, because obviously it is just month by month, and there is some variability there. But 6 months in a row, median price has gone up, and this is the biggest jump I've seen at 21% in Wellington for quite some time, October through to October. So there's no question that the market is, continuing to see very strong price appreciation, and that certainly is what we've seen on the ground, and what I've been sort of was saying even 6 months ago, that it seems to me and to my colleagues that prices are accelerating faster, but it has taken a little while for that sort of to come through in the actual data, which of course is historical. So we see the front of the market, and the data doesn't come through until the sale has been effected. So this is looking in the rear vision mirror, and we're sort of on the ground at the coalface, if you like. But certainly that's very, very strong price growth there. No let up there on price increases. How many listings are we seeing coming to the market? And this is interesting. Again, we saw 684 in October 2020 and 757 in October 2019. So that's 10% less than 12 months prior. So you can see here, this month here, that's lockdown. That's the effect of lockdown. Very few people would put their property on the market while we're in lockdown. And then as soon as we came out of lockdown, numbers recovered pretty quickly to what was close to pre-COVID norms. And we have over that time seen numbers kind of gradually increase. And this may well just be a seasonal thing because obviously here was winter time, and then coming out of winter, we've seen a bit of growth. Now, I have to say that what we typically call the normal spring rush really didn't happen at all until probably the last 3 or 4 weeks. Perhaps the election held it back, but we have certainly seen in the last couple of weeks a large number of new listings coming to the market compared to previous months. But compared to 12 months ago, still very much down on October 2019, so 10% down. It'll be interesting to see what November shows, though, because, as I say, we have seen a large volume of listings coming through this month in the last few weeks so far. So will this increase? Obviously time will tell. But the red line, interesting, you see it's been very, very low the last 6 months or so, and the trend indeed of that red line you can see is just gradually an erosion of the number of new listings coming to the market, very, very slowly over time. And even though the number of new listings monthly over the last 5 months or so have actually been greater than 12 months prior, this is the first time for a few months that we've seen fewer listings than 12 months ago. But even so, the 6-month moving average hasn't increased. You can see it's still here hovering around the sort of high 500 mark per month on average for the last 6 months. But that is being dragged down, of course, by that number there. So that was lockdown. We now have a full 6 months of data since the lockdown effect. And so that final point where the red line gets to is the first time that 6-month moving average excludes that a month there, which was impacted by COVID. So these months prior to that have been held back and suppressed a little bit by that month there, which is obviously pretty artificial. On average, the last 6 months or so, we're hovering at about the same level as we've seen for the last 12, 15 months on a moving basis average in terms of numbers of new stock, new listing coming to the market. But as of 12 months ago, October was down 10% compared to 2019. On the other side of things, how many sales are taking place each month? Again, you can see back 2016, we had high numbers, and then on average that is, and then over time, slowly the number of sales per month has been dropping. As I keep saying, this is not because there's insufficient demand, it's because there is everything that's coming to the market is being sold. And so there's only a limit to how much can sell, regardless of how much demand there is, because the supply just hasn't been there. So interestingly, exactly the same number of new sales in the month in October 2020 versus 2019. So exactly the same number. On a moving average basis, again, you see the same thing. This is the effect here of COVID. Very few sales taking place due to the COVID lockdown. As soon as we came out of lockdown, sale volumes recovered quite very quickly, and we've been, in the last 5 months, we've been back to pre-COVID sort of norms, and very consistently, regardless of the month or the season. So the end of winter through to spring, it's all been very consistent volumes, and you can see that 6-month moving average obviously was punished, if you like, by the COVID result here. And then since then, the average has been climbing back up again. And so where we end up now, where we have the first 6-month moving average data, which excludes the COVID data, we're back up to the same levels that we were operating pre-COVID. So no change now that we've got rid of that low data set. on average as to how many properties are being sold each month. So again, just further evidence that continued strength in the market. And if you're in the market, you'll be seeing it just like I am every day. It's hard out there for buyers. Sellers are very fortunate in that typically in the vast majority of occasions there are multiple offers per property. It's hard work being successful as a buyer out there. And this is translating into a lower than average duration to sell. So we can see in October it's taken 26 days on average to sell versus 29 days in October 2019. You can see there, but again with the red line, until recently at least, we were seeing a very gradual increasing in the number of days it's taking to sell in Wellington. Up until about 15 months ago or thereabouts, where it started coming down again. This was around about the time when interest rates were reducing and the market started moving again a bit faster. Then we had the lockdown and it took much longer to sell, and so that sort of kept the 6-month moving average a bit higher there. And next month in November, when we look at the November data, that's when we will see the first time that the 6-month moving average number doesn't include a higher bit of data there from the COVID lockdown. So 26 days really is not a long time on average to sell in the Wellington region. You can see that the last time it's been down here at 26 days or even less was way back in 2016, when the market really just started getting going, and we were seeing drastically short supply and phenomenally long lines at open homes. So back then it looks like it was 25 days on a couple of occasions, but other than that, it's never been lower than what it has been for the last couple of months, at least in the last 5 to 6 years. So again, this indicates a very tight market. Properties are selling quicker than, for the most part, they have done at any other time over in the last 5 or 6 years.
Adam, are those 26 days from when the sale and purchase agreement signed to settlement? Is that
no.
Unconditional.
This is that's a good question. Is that yeah?
Yes.
This is from the date that the I'd have to double check this to be absolutely certain, but I'm pretty sure what this says is the start point is captured when the property hits the market on the website.
Right.
So that's day one on the market, and then how long does it take to affect a contract?
Okay.
That's what this is saying. So from the day because you could list the property a month before it comes on Trade Me. Right,
yep.
So it's when it hits Trade Me and it's available and the public can see it's for sale until the contract is signed by both parties, and then you have an agreement. What I'm not clear on, is it a contract or is it an unconditional agreement? But either way, again, as I said before, it's the pattern that is most telling. Is the number of days less than normal or more than normal? Are the number of days increasing in general, or are they decreasing? Is it getting tighter? Is it getting easier to sell or harder to sell, and so on? And what it's showing us is that it's certainly it's easier to sell and faster to sell now than almost any other time that it has been for the last 6 years. Does that answer your question, Pip?
Yeah, it does. Thank you.
Yep, awesome. Of course, the one thing that this data doesn't show is there are a bunch of houses or properties that don't sell, and so they will come on the website, and then the marketing will come off the website, and there's no contract for that property, and that property, I mean, how long does that take to sell? Well, it doesn't sell, so you can't include that data at all. So that property might have been on the market for 200 days, and of course that isn't captured. So the data is somewhat skewed by that fact, but of course at the moment very little is not selling. Our clearance rates are well into the 90%, whereas in a tougher market you'd be clearing more like 70%. So 3 properties out of 10 might not sell in a considerably tough market. Again, thanks for that, Pip. Any other questions anyone's got, just jump on in anytime. So inventory, and this means how many weeks worth of supply have we got on the market in any given month. So if no more property came to the market and properties continue to sell at the same rate they have been selling at, how long would it take to clear every property that's there on the market today? And we're at 6 weeks worth of supply, same as October 2019. And again, as you can see from this graph, pretty interesting. Back in late 2015 into 2016, we had huge amounts of stock on the market, 17 weeks worth of supply. And this is 16 sort of weeks worth of supply is, over the last 10 years, 15 years or so, about the average for Wellington. So what we're seeing here is pretty much what it has looked like during a boom only. We've been coming out of a flat part in the cycle here, then all the supply is getting soaked up as demand increases and the number of listings tightens up. And then we hit this really low point where we had a few weeks back here in 2016 where we saw as little as 5 weeks worth of supply on the market. Now, since then, the inventory on the market has gradually been increasing until very recently, where we've had a number of months where we've gone as low as six weeks worth of supply over the last year or so. We've never gotten back down to 5 like we did in 2016. But similarly, we've been at 6 weeks worth of supply in Wellington for the last 3 months. So that's October, that's September, and that's August. So August, September, and October, 6 weeks worth of supply. It's been a very long time since we've had consistently 3 months in a row supply that low. We had it back here with one little exception, 6 weeks onto 7 weeks, and then back here 3 weeks. So indeed, this is consistently low inventory, very low levels of stock, and consistently low. So again, just more evidence that the market is indeed very tight out there. So in terms of how many listings are we talking about on Trade Me? So if you remember, we saw in the last several months, we've seen more new listings come to market than we saw in the same month 12 months prior. So relatively speaking, there has been more new listings coming on than 12 months prior. Then how come the number of listings on Trade Me is still reducing even though new listings has been increasing? And the answer is that the number of sales has been increasing by more than the rate of increase of the number of new listings. So in spite of the fact that we've had more new listings coming to the market generally over the last 6 months or so, this October was an exception, 10% down, but the number of sales has increased more than the number of new listings. And so therefore we're seeing stock levels on Trade Me come further and further down. We are up, as you can see here, in November. This, of course, is pretty much live data. It's not relating to October, because we know what volume of stock are on Trade Me as of today, and every other day we care to look. So you're seeing an uptick there, and this is what I said before. This is basically what little spring rush there has been. In November, you've seen the number of Trade Me listings increase a little bit compared to October. As I said before, there seemed to be no spring rush at all in terms of listing volumes and amount on the market. As spring came, it seemed to be held back by the election, perhaps. I don't know. But in the last few weeks, as I said before, we have seen a lot of new listings coming on. That being said, it's not going to have a big effect on the overall volumes on Trade Me, because they're selling pretty much as quickly. And you can see that compared to 12 months ago, even though we've got an increase in listing volumes in November, it's still 23% down compared to November last year. Now that is a huge difference. And if we go back to 5-6 years ago, we're seeing Trade Me volumes up here at close to 4,000 for the whole region. And as of today, it's 1,300. So this is a huge difference. So yeah, again, sound like a broken record, but just more evidence that the market continues to be very, very strong indeed. It is hard work out there for buyers. So that's the data I've got for you. I'm happy to talk further, but you know, price growth strengthens even further. The highest median price growth I've seen since I've been tracking this data at 21% that I can recall anyway. New listings bucking the trend compared to the last sort of 6 months or so. We've seen more new listings come to the market than 12 months prior. Well, in October, we saw fewer new listings compared to 12 months prior. That is not going to help with the tight market. Sales volumes are overall stable, and duration to sell has decreased. Stock and inventory levels are very, very, very low. The market is unbelievably competitive. As I keep saying, every week that goes by, my eyes water and my head spins. But that's the data I've got for you today. So if you have any other questions, please jump in. Happy to have a chat. Don't be scared. I promise I won't bite. I'll just give you a moment to think about anything you want to ask or comment or just have a discussion about.
Adam, it's Pip here again.
Hey.
With house prices increasing so rapidly, would you expect to see rental rates follow in a similar trend, albeit with a lag?
When you say rental rates, do you mean
weekly rentals?
Rent? That's a really, really good question, and it's a very different market. I mean, ultimately, in the long term, if properties are more expensive to buy and to own, then it just makes sense that investors who own will demand greater return to compensate them adequately for the capital that they have invested. Right? That makes sense. But it's a really slow relationship, is what I find. So when prices go up, rent doesn't just go up, because the rate of rental is not a function of house prices. It's a function of rental supply and rental demand. And those things change very slowly as a reaction to house prices, if that makes sense. So if investors are thinking, wow, house prices are far too high, it doesn't make sense to own more investment property, then they don't just sell everything they've got. So therefore the supply doesn't change greatly, but they might slow down their future purchases a bit. New investors might not come into the market as quickly as they otherwise would. And so the supply of the rental market changes really slowly in response to the house prices.
Yeah.
That being said, at the moment, it's actually not all that expensive to own the real estate because interest rates are so very, very low. House prices are eye-watering, but only when you compare them to what they were a year ago or 2 or 5 or even 6 months ago. When you are a first home buyer thinking about, do I rent or do I own? And this is coming back to your question about that sort of thing impacts the rental market. If a renter buys a property, that's a change to the rental market. If they're thinking, okay, I'm renting today and I'm renting whatever it is and I'm paying whatever I'm paying, and I can borrow $1 million, and that $1 million costs me about $500 a week in interest. Now, if I compare that to $500 in rent, what can I rent for $500? Sweet bugger all. And so it still makes sense for the tenant to become a first home buyer and buy. And that's why you're seeing so many first home buyers in the market, because even though prices are huge, the cost of ownership is still not huge compared to rents that are being paid. So ultimately, yes, high house prices, or probably more accurately, the cost of home ownership as opposed to what the actual price is, will impact on the rental market, but it's a really slow relationship. So do I think rents are going to go up now because prices are going up? I don't, actually. I don't think that in the next year or two we're going to see big rental increases, and I could very well be wrong, but because what a tenant can pay in rent is related more to how much they earn than how much is a house worth. And so you tend to get strong rental growth when you have wages increasing, and you have the supply of rental property tightening. And at the moment, actually, investors are quite active in the market because interest rates are so low. And where else do you put your money? And prices are going up, so people have got fear of missing out. They want to get in, they want to buy something so they can capitalise on the next little bit of growth or whatever the case may be. So there is a bit of activity from investors that would suggest that perhaps supply is not going to tighten. On the other hand, on the demand side, tenants who tend to be younger people, who tend to be singles or couples, not families. This is on average, of course. Those people, they are not typically earning the big money. They are in the lower paid jobs, and those jobs are the ones that perhaps are suffering a little bit from the slowdown in the economy. That being said, again, as every month goes by and more data comes out on the economy, it all is reasonably positive, and the economy seems to be trucking along pretty well, with the exception of those markets that are, of course, related strongly to international tourism in particular, and hospitality, especially in those parts of town where the risk of lockdown and so on is a bit more. So, I personally don't think that there's a lot of scope for rents to increase a lot in the near future, because we've had 5 years of strong rental growth and there's only so much that the tenants can afford to pay. That's my personal view. And in fact, with my properties in Wellington, I've told my property manager, offer it to the tenants at the current rents. So I'm pretty sure that's across the board for all my properties in Wellington. The existing tenants, if they want to stay, they're getting offered at the same rent, because I'm thinking that rents aren't going to go up that much, and I'd rather have the tenants stay there and happy to take the same rent. In Kapiti, rents are still growing. It's a different story there, and I think that may be to do with a bit more mobility of the labour market, because not everyone is having to work in the CBD office. There's a lot of people out there who are doing week on, week off. And so they're thinking, well, maybe I'll go and take a cheaper place closer to the beach, and I'll go and live in Raumati or something like that, and commute every other week. So perhaps there's that sort of thing going on. But in the city, I don't personally think we're going to see big rent increases. That was a very long answer to your short question, but hopefully that was useful.
Oh, that's great. Thanks very much. I appreciate your comments.
Yep, very good. Anyone else got anything you want to ask or comment or chat about? We've got about 5 or so minutes left on the Zoom call before we get chopped off.
Yeah, I'm just wondering what type of settlement types vendors asking for?
Right.
What type of settlement duration are vendors asking for? You mean sellers, or buyers?
Well, both. The settlement time's just as short as the times on the market, or are people liking long settlement dates?
Everyone is different there. Richard, that's you, Richard speaking? Yeah. Look, it varies, but what's normal is 3, 4, 5, 6 weeks for settlement. But really, the vendor holds all the cards at the moment. So, I mean, I'm selling for people who are happy who want to settle in 2 weeks or 3 weeks, and if the purchaser wants the property and they at all can accommodate that shorter settlement time, then they will try hard to do that, because they want their offer to be as appealing as possible to the vendor. At the same time, I have vendors who want to settle in 3 months, and the same is true. We will say to the purchasers, we will say to all purchasers, look, the preferred settlement duration for our clients is 3 months. Might be February, 2021 because they want time to go out and find a property and purchase and have time to organise themselves and move into that property and coordinate both sides of the deal. And again, if the purchaser wants it, I mean, in that sort of situation, especially if it's appealing to first home buyers, the purchaser has more flexibility typically on settlement duration than people who are trading up or down. But really the market is so competitive that most of the time the buyer will try very hard to accommodate the vendor's preference if at all possible. So yeah, we've had anything from 2 weeks through to 3 or 4 months or longer, Richard. But you know, what's normal is 4 weeks or 6 weeks. That would be the average.
Okay.
Yeah. Hey, well, that's all good. Thank you so much for joining us today, guys, and hope that was useful and interesting. Obviously, if you need any particular advice or want any help with anything, just sing out. You know how to find me. But yep, happy days out there. Happy hunting, happy selling. Good luck with whatever you're doing, and see you again next time. Bye.